The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
It is an absolutely huge news day. Welcome to Squawk Box this Monday morning with Karen Cho and myself, Steve Sedgwick, and these are your headlines. President Donald Trump has now triggered his trade war, sending the dollar higher and Asian equities lower, with 25% tariffs on Mexico, on Canada, and a 10% surcharge on tariffs that were already in place on China, also threatening that the EU will be next.
We may have short-term some little pain, and people understand that, but long-term, the United States has been ripped off by virtually every country in the world.
Well, Canada's not taking it lying down. It's hit back, announcing its own 25% tariffs, while Mexico also vows to retaliate. China says it will take necessary measures.
Italy's Unicredit discloses a new stake in the country's largest insurer, Generali, denying any strategic interest but further deepening M&A wrangling in the sector. Commerzbank posts a record full-year pre-tax profit as the German lender flexes its financial muscle in the face of unwelcome advances from Unicredit.
Well, as Mr. Rumsfeld once said, good morning. He didn't say good morning, Karen, but good morning, Karen. He may have said, almost certainly Donald Rumsfeld did say good morning, Karen, at some stage in his life. But no. He said there are known knowns, there are known unknowns, there are unknown unknowns, and then there are unknown knowns. I don't know where this is, but we all knew he was going to do it at some stage. We didn't know the magnitude. We didn't know how it was going to manifest, but the ramifications are huge. We will spend, I promise you, virtually most of the next week digesting this, so there's absolutely no rush on this one as well. But let's just listen in again to what Donald Trump said about the tariffs and the potential pain for Americans as well.
We may have short-term some little pain, and people understand that, but long-term, the United States has been ripped off by virtually every country in the world.
Right, we may have a little pain. If you're a consumer, high-frequency economics, Carl Weinberg says the following. Well, we think this is an imposition of $300 billion worth of new taxes on US consumers. That's a little bit of pain in the meantime. Goldman Sachs, I was going through their David Kostin's piece this morning as well, suggesting that if sustained, this could potentially be a 5% downside for the S&P. And for every 5 percentage points of extra tariffs, it could affect the EPS. I think it was by 1 to 2% as well. But there is a lot of copy out there, Karen, on and digesting it. To be fair, others such as JP Morgan's Jamie Dimon has been more relaxed about it, saying if used properly, they actually could be beneficial.
Did Trump just kill the bull market, though? I think that is the big question. We're tracking about 1.5% off the all-time high in the S&P 500. The market, I think, while they knew tariffs were coming, they thought perhaps it was a negotiation. You've seen a ton of broker reports and what the investment banks were suggesting, that this was just a negotiating tactic. And as a result, I think investors were focused on DeepSeek first up, implications around IT. They were then focused on the fundamentals that started to roll across on the earnings season. I don't think they necessarily were priced for the risk of Trump hitting hard with tariffs. And if you look at where the market has now positioned, so close to those record highs, it suggests that perhaps there is something coming. What was interesting was to see the hedge funds, though. They were piling into some short bets a couple of days ago. So there was some caution out there, hoping that there might be some negative impact on the market. So they were piling up some of those bets against Trump's image for America. So there has been some repositioning. Interesting to see just how quickly we snap back on those US markets today. So I think we're already seeing it on foreign exchange markets in particular.
Indeed we are. Donald Trump has ignited a trade war, hitting Canadian and Mexican imports with a 25% tariff, whilst putting levies of 10% on Chinese goods. The duties are set to come into effect from Tuesday, 5:01 GMT. Mr. Trump's measures also seek to clamp down on a trade provision known as de minimis, which allows packages worth less than $800 to be shipped into the US duty-free. Critics have argued that the loophole has allowed for the explosion of budget retailers such as Temu and Shein. Trump argued the moves were needed regardless of the cost.
We may have short-term a little pain, and people understand that, but long-term, the United States has been ripped off by virtually every country in the world. We have deficits with almost every country, not every country, but almost. And we're going to change it. It's been unfair. That's why we owe $36 trillion. We have deficits with everybody. We help everybody. We've been helping everybody for years. And to be honest, I don't think they appreciate it. So we're going to change that. We're going to change it fast.
Let's take a look at that market reaction across Asia. Deep falls for Tokyo stocks. The Nikkei trading down by about 2.7%. Reversal for Hong Kong. Don't forget some of these markets playing catch up too after the Lunar New Year holidays. So returning with quite a jolt. We're down 6/10 plus on the Hong Kong market. The Kospi is down 2.5 and the Topix shedding 2.4%. So an impact in the red right across the Asian markets. Let's take a look at the tariffs impact on some key sectors from autos to electronics and e-commerce. Toyota stock down 5.2, biggest step down for Honda and Mazda. Nissan as well, those stocks down 6 to 7%. You can see some of the big electronics makers, Samsung down about 2.8%, a bigger dip for LG down more than 7%. So really mixed response here at JD.com as we take a look at some of the e-commerce players out of China, that exemption that's now been revoked on small packages being sent over to America, 3.5 down on JD. Foreign exchange markets, the US dollar is king. Again, that is a clear story that we are seeing, and 1.1% pop on the dollar index. Dollar firmer versus the Canadian, so the loonie is seeing an ascent of 1.5% versus the peso, 2.3 almost to the upside for the dollar. And you can see elsewhere the yuan is slipping. Euro is looking soggy this morning, down more than 1% as we brace for a tariff impact. Sterling also falling. Don't forget, we've been celebrating the 5-year anniversary since Brexit. And of course, that was one of the other big impacts on sterling in recent years. So we're down 0.9 on that trade this morning.
Right. Let us move on. Canada has retaliated against President Trump's tariffs, hitting $155 billion worth of goods with a 25% tariff, with the Prime Minister Justin Trudeau adding it doesn't have to be this way. Mexico has yet to show its hand, but the President, Claudia Sheinbaum, slammed Trump's tariffs and vowed retaliation.
Well, China has yet to unveil any retaliatory tariffs, but has pledged to take necessary countermeasures. The Commerce Ministry said it will file a lawsuit with the WTO over the levies, adding Trump's measures do not resolve America's own issues. The Foreign Ministry also specifically addressed fentanyl, describing it as America's problem. Trump had said the synthetic opioid was fueling a national emergency and cited it as a major justification for the sweeping tariffs. Speaking to CNBC before the tariffs were announced, White House senior trade and manufacturing advisor Peter Navarro said the duties would help pay for government.
President Trump wants to move from the world of income taxes and countless IRS agents to a world where tariffs, like in the age of McKinley, will pay for a lot of government that we need to pay for and lower our taxes, and that's through the external revenue service.
Let's get out to Sam for more. Sam, talk us through the reaction there, because we know China has been struggling to find a foothold economically. This seemingly brings more pain to the Chinese economy.
Very good morning to you, Karen and Steve. So the Chinese response is being referred to as fairly restrained. That comment that you just read out, as far as their response there, is fairly typical language we often hear from Beijing, so it's really nothing new. You've got to remember that, of course, it's the middle of the Chinese New Year when many are on holidays, so this is very much the official line, but we haven't had any specified details as to what those countermeasures would actually look like. On the filing the lawsuit at the WTO, the World Trade Organization. The view is that is largely symbolic. It doesn't have any implications for the US. That is really largely about the messaging of China saying that it abides by the rules. It's sort of taking the moral high ground, so to speak. With regards to the fentanyl issue, because we've got to remember that this is what the tariffs are actually about, this extra 10%. We do know that under the Biden administration, under a huge amount of pressure, that China did actually crack down on the precursor chemicals that goes into the fentanyl. So whether they can actually negotiate some terms where China can actually satisfy the Trump administration remains to be seen. So they have basically said that it's not their problem. This is a US issue, not China's. So that's been the official line from Beijing. But of course, we're not seeing any reaction in the market. What we have seen is a reaction in the Chinese currency offshore, down about 0.5%, or although it has come off the lows this morning. We know that this is going to be used as a shock absorber. But there has been a lot of conversation around whether they will revisit the phase one trade deal and some of the failures of that, which was largely around purchasing agreements, particularly in agriculture, and of course, changing some structural issues to do with the Chinese economy. Back to you.
All right, Sam, excellent. Thank you very much indeed for that. Well, President Trump has received a stinging rebuke of his policies, with the editorial board of the Wall Street Journal calling it, quote, the dumbest trade war in history. That's what the Wall Street Journal had to say, the dumbest trade war in history. Whilst the editorial board of the Financial Times published a piece yesterday called The Absurdity of Donald Trump's Trade War. And I just read a piece from John Authors as well, saying, I'll just give you the headline of this one. How stupid is this trade war, question mark? Let me count the ways, which is kind of adulterating a rather beautiful poem. Anyway, Peter Trubowitz is Professor of International Relations and Director of the Phelan US Centre at the London School of Economics and Political Science. Peter, nice to see you, sir, as well. Let's take a step back. A lot of criticism, but are the critics wrong? Is Navarro right that this will rebalance the US economy?
Well, I mean, what Navarro is arguing is, basically Navarro and the rest of Trump's team seems to be arguing that this will help generate the revenue that is needed to extend the 2017 tax cuts and get it through the Congress using the filibuster-proof tool known as reconciliation. The problem with the tax cuts that he wants to push through over the next couple months is there'll be a shortfall of about 4.6 trillion in tax revenue. And so the idea is to use the revenue that's generated from the tariffs to make up at least a chunk of the difference. But frankly, it's hard to see how this works because, the total U.S. import of goods and services is about 3.25 trillion. So it's just not really, the numbers aren't there. I mean, somebody needs to get a calculator in the administration, but that seems to be one of the central arguments. But let me just say, I think the proximate reason here that Trump moved in this direction, when you look at the timing, I think it's important to bring up the politics as you have. The headlines for Trump last week were terrible. And he needed to change the storyline very quickly. And he did, because nobody's talking about freezes on foreign assistance. Nobody's talking about purges of the FBI. Nobody's talking about firing inspectors general. And nobody's talking about Elon Musk sweeping unchecked power. Trump changed the conversation big time. Everybody's talking about the trade war, including us.
It's a very good point, but everyone on Wall Street certainly poring over the minutiae, and not everyone against it. Let's listen into what Jamie Dimon has to say, Peter, before I get to my next question to you, because the last couple of words in this bite from arguably the most powerful man on Wall Street, well, it looks like he can see some rationale in it.
I look at tariffs, they are an economic tool. That's it. They're an economic weapon, depending how you use it and why you use it and stuff like that. And, people argue, is it inflationary and non-inflationary? I would put in perspective, if it's a little inflationary, but it's good for national security, so be it.
If it's a little inflationary, if it's good for national security, so be it. Pretty relaxed Jamie Dimon there, Peter, about the whole thing.
Yeah, but I mean, if you think that that is the purpose of this, that it's driven by national security considerations. I mean, the way that Trump has justified this, of course, is to stop the flow of drugs and migrants into the United States, not to make the United States more competitive economically, not to get, America's allies to bend a knee on, to allow more American exports into their country. In fact, I think that's to that extent, it's a clever move by Trump because it's going to be very easy. Let's say the American public goes south on this and is very unhappy with the tariffs. That's an easy out for him. He'll just, because those countries will immediately agree to, let's put together a committee, that will ensure that there's less fentanyl going into the United States. There's almost none going in from Canada. And that he'll find a face-saving way out of it. I think Diamond and others believe that this will be very short-term and it won't be long-term. And I think we just don't know.
Peter, to the point around tariffs, I mean, we were talking the other week about a slow increase in tariffs, that the introduction would be at a much lower threshold. Therefore, you may not get such a retaliatory move by other countries because it's a smaller level of tariffs. That's not what we've got today. This is the forceful nature of tariffs, the worst case scenario that markets were talking about. In this context, could the US face a raft of other countries just simply drawing up tariff lists?
Yes. So, I think the amazing thing about this to me is that it is directed principally at America's allies and trading partners. I mean, reminds me of that old Henry Kissinger line. It may be dangerous to be America's enemy, but it can be fatal to be a friend. I mean, what's unfolding here is not supposed to happen under the U.S.-Mexico-Canada trade agreement, an agreement that Donald Trump negotiated and signed in his first term. Trump has basically set aside America's treaty obligations, and what he seems to be figuring is that America's allies, and this is going to be, I think, the same thinking with respect to the EU, that for America's allies, access to America's market is just more important than its word. And I think you can just expect retaliation across the board. Xi Jinping must just be sitting back figuring, I would keep my powder dry and let the allies, U.S. and its allies, beat themselves up for a while.
Peter, can we talk about the impact on domestic politics? Because the inauguration looked more like a coronation of Donald Trump. And we have had Republicans effectively singing from the same hymn book for a while now. What does this mean in terms of how Republicans could splinter? Because Mitch McConnell's already come out. He's criticized the tariff, saying will be paid for by American consumers. I mean, why would you want to get in a fight with your allies over this? Could Republicans pick a fight internally?
It's possible that this brings some of the latent fractures inside the Republican caucus to the surface. But some Republicans are already and will be all in because they want the tax cuts and that this will provide, in principle, a way to make it revenue neutral, or because they want to stick it to America's allies. But others, and here is what I think, McConnell is reflecting, are going to squirm, knowing that Canada and Mexico are going to retaliate. Canada already has, by targeting industries in their districts and states, or because they know that Democrats will use this issue to hammer them, or both. But at the end of the day, I suspect most Republicans will fall in line, basically because they'll fear Donald Trump's retribution if they don't.
But Peter, let's just take an even further step back and look at this holistically, shall we? If I was an American voter in the Rust Belt, if I was an American voter in many of these states, West Virginia's a great example as well, I would say that free trade hasn't worked for me. I would say that the job opportunities post the industrial phase hasn't worked for me. The unabated imbalance of trade deficits versus trade surplus for a lot of the importing countries hasn't worked for me as well. Isn't it right that someone in America tries something different?
Well, this is what Donald Trump is calculating. He's assuming that his core base in rural America is going to stick with him. And that, his view is they did in his first term. The farmers stuck with him in general, and he thinks that's going to happen again. We're going to have to see how they feel when the price of gas, when they go to the gas station and the price goes up. I mean, assuming it does. He does have a carve out for Canadian energy, but I think most economists think there'll be knock-on effects here. I think Donald Trump has running room with respect to his political base. There's no doubt about it. And, I think the question is really how much running room.
Peter, can I ask very quickly about the rerouting of supply chains? Because we've seen this change in recent years to using the borders of Canada or Mexico, this whole North American supply chain. But what we're now seeing in terms of numbers, that this would require the United States to more than double its own manufacturing output to cover the gap. This is what ING was saying over the weekend. Is it possible that we will see corporations quickly pivot to put more manufacturing in the United States?
Possibly. I actually don't think that's going to happen in the short term at any rate. I think a lot of businesses are going to calculate, like Jamie Dimon, who you mentioned earlier, is calculating that they can handle and price in a certain amount of the tariffs, and that in fact foreign companies will as well, that they'll accept lower profit margins to be able to have access to American consumers, to the American market. That seems to be what Donald Trump is betting. I think Donald Trump thinks the American market is absolutely huge. It's his leverage, and he's going to leverage it. He told us he was going to do it. He's doing it.
Right. Peter, thank you very much indeed for kicking off what will be hours and hours of CNBC coverage about the aforementioned issue. Peter Truman,
good luck, Steve and Karen.
Great to see you, sir. Professor of International Relations and Director of the Phelan US Centre, London School of Economics and Political Science. Right, well, we've already played the Jamie Dimon sound, who's a bit more relaxed about it. But for more insight into President Trump's tariffs and more detail on how Canada, Mexico and China have responded, there is so much coverage on CNBC.com.
Coming up on the show, Germany's centre-right CDU is set to gather today as Berlin's elections heat up. More analysis ahead. Plus, we'll be speaking to the CEO of embedded finance platform Solaris on their new financing round. That is a CNBC exclusive interview after the break. And later in the show, we'll be joined by the Bank of Portugal Governor Mario Centeno. Don't miss that first on CNBC interview at 8:30 London time.
Julius Baer is one of the few companies in Europe that has an equivalent price to book of the US players, has just under 2 at the current time as well. Had a good rally off its lows over the last 12 months, but on a 5-year basis, less impressive. But there's some interesting numbers here as well. So assets under management grew by 70 billion Swissy, up 16% to a record 497 billion Swiss francs. They're going to present a strategy update, including new medium-term targets, ahead of summer 2025. Interestingly, though, there's a line here about not extending the, here we go, has decided not to pursue the launch of a new share buyback program. So you wonder if that will be disappointing to some investors out there, targeting another 110 million Swissy of gross savings as well. So some big numbers in there as well, including the fact that their net income is 1.02 billion Swissy.
Let's push on to other banks. Commerzbank profit jumped more than expected last year, up 20% to what it said was a record 2.68 billion euros. The German lender also announced a share buyback of 400 million euros and hiked its dividend as it released earnings almost 2 weeks early. Unicredit has disclosed a 4.1% stake in Italian insurer Generali. The bank has also revealed an additional 0.6% holding as part of its ordinary services for clients and related hedging. In a press release, the Italian lender denied having any strategic interest in Italy's biggest insurer and said the stake is a, quote, pure financial investment.
The Fed's preferred inflation gauge, the personal consumption expenditures price index, jumped 2.6% in December from a year earlier. That is in line with expectations, but well above the central bank's target. The core figure was up 2.8%. The report comes days after the Fed voted to hold its key interest rate following a series of cuts. Now, later today, our US colleagues will be speaking with the Boston Fed President Susan Collins in a CNBC exclusive interview. Don't miss that at 4 p.m. London time. Just to say, all inflation data now, I'm afraid, has to be put in the context of the big news. The fact is, what are the inflation ramifications of the trade war which has now started? This won't be the first salvo from the administration or indeed from rivals or foes or friends of the United States who are importing goods into the United States. So everything we're looking at in terms of inflation data now, I'm afraid it's kind of out of date with the news flow.
Yeah, don't forget a lot of Americans have been feeling the pinch from higher inflation. So the fact that we're still seeing sticky prices, that has an impact. And latest news about the likes of Shein and Temu, those cheap products a lot of Americans have relied on to try and manage their finances, those will not be accessible at the same price in future. So I think this has been a really interesting feature of the US economy. Costco, when Americans found it tough going last time round, was at the forefront. This time it's been some of the Chinese companies, but of course tariffs are going to upend some of that pricing structure now.
Well, especially if the likes of Temu and Shein have more import duties to pay.
Thank you for listening to Squawk Box Europe Express.
For more market-moving news, you can head to CNBC.com.
Or join us again on the show with Steve Sedgwick, Karen Cho, and myself, Arabile Kumete, weekdays on CNBC.